Hi, welcome to the Dutch Value Investor channel. In this video, I'll be giving you my short analysis of the Moat, the management and the intrinsic value of Monster, using information from their 2022 first quarterly report. So without further ado, let's have a look at the Moat. The Moat, or durable competitive advantage, is what is protecting the company from its competitors. A company with a wide moat is much more likely to still be around after 10 plus years and have good and healthy operating margins, even with competition trying to get a piece of the action. The presence of a moat is vital for a long-term value investor. I believe a company with a wide moat will have a minimal average growth of 10% compounded per year for at least the last 5 to 10 years for the following metrics. The first being equity growth. Second, earnings per share growth. Third, operational cash flow growth, and fourth, revenue growth. So looking at the growth rates of Monster. Equity growth comes in at 20.96%. Earnings per share growth is 17.55%. Cash from operating activities growth is 42.35%, and finally revenue growth comes in at 12.52% compounded over the last 10 years. Giving Monster an average moat growth of 23.35% compounded over the last 10 years. A nice growth average and nicely above the preferred 10%. It looks like Monster has a wide moat based on these numbers. So I believe a healthy growth rate can be maintained for the medium to long-term future. Next, let's have a look at Monster's management. Besides having a wide moat, it is essential for a company to have capable and efficient management. For an investor in the company, it is also important to have shareholder-friendly management. In order to evaluate the quality and efficiency of the management, I will be looking at the following metrics. Number 1. Return on invested capital, meaning what is the rate of return on the money being invested into the company itself. Looking at the return on invested capital, Monster's management was able to maintain an average return on invested capital of 28.8% for the last 10 years. Nicely above my preferred 10%, and this indicates to me that management allocates its money effectively. Number 2. Long-term debt versus free cash flow. I like a company to be able to pay off its long-term debt with its free cash flow within a maximum of 3 years. Since Monster has no long-term debt, I am confident the company won't get in any trouble soon because of financial problems. And finally, number 3, share dilution. I do not like it when management is reducing my share of the company at a higher rate than 1% compounded per year. I'd rather have them buying back shares and increasing my piece of the pie. For Monster, looking at the last 5 years, management has been buying back its own shares at a 2.23% compounding rate. So looking at these numbers, I believe management is capable and efficient and seems to have the shareholders' interest at heart. Now, let's get to the valuation. I will use my projections and analyst projections for the next 5 years to come up with what I believe is today's intrinsic value of Monster. In order to calculate today's intrinsic value, using this formula, I will have to use 4 numbers, being trailing 12 months earnings per share, future growth rate, future price per earnings and required rate of return. Trailing 12 months earnings per share can be found on numerous financial websites. For Monster, the trailing 12 months earnings per share after release of their latest quarterly report is $2.53 per share. For future growth, I will not only be using the moat growth, but also the mean of what analysts are projecting for the next 5 years. If the two are in line, I will be using the average of the moat growth and analyst growth rate. For Monster, I assume the projected compounded annual growth rate to be 19.23%. For future price per earnings, I multiply the growth rate by 2. I always verify if this PE is reasonable and historically accurate. Meaning, has the stock been trading at this PE level for a considerable amount of time in the past? Since a PE of 38 is a bit on the high side for the last 5 years, I reduced the PE to a more reasonable 34. Finally, the required rate of return. For an investment in an individual company, I am looking for a 15% return on my money. Otherwise, I do not find it worth the risk of investing in individual companies. Using the following formula, I believe today's intrinsic or fair value of Monster is around $104 per share. Now to be clear, I am not buying Monster at $104 per share. A lot can happen in the coming years and my assumptions can be wrong or too optimistic. So I will always apply a 30 to 50% margin of safety. So in this case, because of the growth rate of 19.23%, I will apply a margin of safety of 40%. So to me, Monster looks attractive at $62 and downwards. Let me know in the comments below which company you would like to see me analyze next. And don't forget to hit the subscribe button and click on the notification bell to get your valuation update as soon as possible after each quarterly financial report. Thanks for watching and see you in the next video.